SoFi is absolutely on fire today. It's up 17% right now. It was up closer to 20% earlier. It's trading at $11.19. Now, this is, of course, off of earnings and also is 15% short interest, so you're seeing some juice being squeezed out of that orange. So a bit of a short squeeze here. Is SoFi stock at this point, is it a buy, a hold, or a sell? This video will tell you the answer. Now, it's trading around a $10.5 billion market cap right now, and it's up 148.89% year to date. In the past month, it's up 34.29%. SoFi released earnings this morning pre-market. Q2 GAAP EPS, 6 cents, that's in line. Adjusted revenue, $488.82 million. That's up 37.3% year over year, and it beats by 15.45 million. So guidance, management expects to generate 1.025 to 1.085 billion of adjusted net revenue in the second half of 2023. Now that range is up 19% to 26% year over year. We'll talk more about what that means later. The adjusted EBITDA would be about 180 to 190 million dollars. Of course, SoFi has a ton of products, probably more than you even realize. I'm going to show you the exact number and the growth here in a second. This is their website. You can see everything from personal loans, banking, credit score and insights, investing, mortgage loans, insurance, travel, credit cards, student loan refinancing, and more. In fact, if you go to their website and just go into products, look how many products are on your screen. You're talking about everything from personal loans, investing, mortgages, insurance. You're pretty much covered. Anything financial. This is a bank, but it's a fintech company, an online bank. It's a bank of the future, and it's really targeted towards younger generations. So member growth. They added 584,000 new members in Q2. That brings the total to 6.2 million, and it's up 44% year over year. And that number is strong, but at this time last year, we saw the growth around 69-70%. So this is slowing down a little bit. Products. This number is always a little bit staggering to me. Added 847,000 new products in Q2, bringing the total to 9.4 million. 9.4 million is a lot of products. It's up 43% year over year. How they continue to keep growing the number of products by this much when they have so many products, it's pretty mind-blowing. Now, this is Galileo accounts in millions, and we had a dip here last quarter from 131 to 126, but now a pop from 126 to 129. So 129 million total accounts, up 11% year over year. Lending and financial services products up 47% year over year, 7.9 million. You can see the growth on your screen. This slide's talking about the productivity loop for financial services. So essentially we've reached an inflection point which creates marketing efficiencies and improves X buy. So look at 2021 Q2, that's 2.7X. That blue is the total financial service products. The black is the total lending products. And you can see that's gone to 5.3X. So more products to cross-sell to existing members and also growing the number of members exponentially, even though it has slowed down. So quarterly performance, this is sitting at 16% margin. Recorded adjusted net revenue, 489 million, up 37% year over year on the growth. And then that record adjusted EBITDA is $77 million. And you can see the growth here on that right-hand side. Quarterly adjusted EBITDA in millions. It's gone from 20 to 77. Here's the non-GAAP result versus guidance. So adjusted net revenue, 489 million versus guidance of 470 to 480 million. So it beat by about 9 million at the high end. And adjusted EBITDA was about a 17 million beat at the high end. So I talked about this number earlier, but here it is on your screen. They expect to deliver that 1.025 to 1.85 million in adjusted net revenue and 180 to 190 million in adjusted EBITDA. So SoFi trading at $11.20, up 17.25%. Looking at the 52-week range, the low, $4.24 back December 28th, 2022. 52-week high is today, July 31st, 2023, and it was $11.70 earlier this morning, up 20% on the day. So short interest on Fidelity is 14.73%, and that's part of the reason for this pop today. The question you have is, the stock still a buy? Is it going to go higher? Is it just a hold, or should you be selling right now? So valuation, I've been telling you for months and months, when this gets to one price to book or less, it's a pound the table buy. We were saying at $5 or less in that one price to book or less range to load up the truck. Now that price to book, 1.72, and it nearly doubled from the lowest point. Now the PE for next year's estimate, because SoFi is improving profitability, but growth is starting to slow at the same time. But that PE for next year's estimate, 272.9. So that's not inexpensive by any means. But let's look at the price of sales historically compared to what it's trading at right now. Hey guys, I want to interrupt here really quick to remind you, every single month I do a best stocks to buy. And I'll be doing another one here for August. It'll be coming out sometime this week here, so stay tuned. If you're not subscribed, make sure you subscribe to the channel, click that bell for notifications so you don't miss this video and many others like it. So at the top, it shows you stock price. And way back here, basically the end of 2021, December 31st, it was a $15.81 stock. Now at that price, you can see at the bottom, the price to sales ratio, 4.33. And if you look at last summer, June of 2022, price to sales ratio was 2.94. It dipped to 2.53. It was 2.34 price to sales at its lowest point at that 52-week low, December 31st, 2022. Today, it's trading back at a 4.32 price to sales when it's sitting around $10 a share. And of course, it's not trading at $9.55 a share. It's trading over $11 a share. So that price to sales ratio is higher. In fact, you can see on your screen, SoFi is trading over a 6 price to sales ratio. And this chart on your screen shows in purple, that's the price to sales ratio. That orange color is going to be the forward price to sales ratio. The forward price to sales is still at 5.39. But you can see that aggressive spike from the lows to where we're trading at today. So the most expensive we saw for price to sales ratio was 4.57 back March 31st, 2022. So SoFi trading over $11 a share is the highest price to sales ratio it's traded at. And of course, this was a SPAC, and it was one that was hyped up. It ran up and then it fell off a cliff, and now it's rallying back up. Wait till you see the chart here in a second. So next, let's look at a chart, and I'll tell you if I think the stock is a buy, a hold, or a sell. And I'll also provide some commentary. Before I do that, if you're new here, subscribe to the channel, click that bell for notifications. And if this video is helpful, drop me a like and drop me a comment. And I need to announce this video is sponsored by the Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. Also, join our private community Patreon Discord. We're crushing it in there. You can join us by visiting patreon.com/firedupwealth. So next, we're going to look at a chart. And before we do that, when you see orange, that's a previous chart day. We do chart day every single Wednesday in Patreon Discord. And you can join us live again by visiting patreon.com/firedupwealth. When you see yellow, that's today's chart day. There's not going to be any yellow. I'm just going to talk through it with you on the screen. Now, you might recall, if you've been following this channel for a while, I've been telling you $5 or less is that pound the table opportunity for SoFi. And we have multiple videos in the channel. There's 6 different videos talking about this price target. Here's a couple past clips just showing you what I'm talking about. I think that SoFi guys can do very well. If you're buying this thing under $5 and holding it long term, I think the risk reward is there. I don't think this company is going anywhere, and I think it's an opportunity at $5 per share or less. SoFi. So in a little bit, I'm going to share my thoughts on why the stock's down. We're also going to look at a chart. But first, I want to show you this clip here from CEO Anthony Noto on CNBC. Check it out.
I want to point out, by the way, too, that you were buying your shares the week after the SVB collapse. Just talk to us about that a little bit.
You know, I'm focused on the long term for our company. We think we're building the company that's going to be the winner that takes most in the digital financial world. We've built a very durable company that's a one-stop shop across all of your financial needs, and that's allowing us to gain huge market share. You know, we grew over 40% in revenue to an 8th consecutive quarter of record revenue at $460 million. And 3rd consecutive quarter of record EBITDA. So the business is operating on all cylinders, and we're able to weather the storm that's out there because of our diversification and our unique approach. And so I'm focused on the long term. And when I see opportunities of uncertainty and investor concern, I want to make sure I express my confidence by putting my money where my mouth is.
I like this stock when you can get it around $5 or less, around 1 price to book. I think it's attractive, but only for the right risk tolerance. And this stock could make you a lot of money. The fact that the CEO is so bullish on the company, it certainly gives me more confidence. There's a lot of stocks that are in this category. You don't see the CEOs coming on CNBC and telling you they're buying more shares and telling you they're positive about the outlook of the company. So again, orange is a previous chart day. Look here at the bottom of this text. DCA below $5, long-term spec, strong buy under 1 price to book. The last time we talked on chart day, pre-market this morning, said it could go higher, but hopefully you bought it in the 4s and the 5s. And we said, watch the R3 next around $12. That's that red line right there. So these are Fibonacci pivot points. This is a Fibonacci retracement, the color there. This R3 is just under $12 a share. The high on this stock today, it got to about $11.70. It's trading right now where this dotted green line is. It's at $11.29. So is SoFi stock a buy now at these levels? Is it a hold? or is it a sell? Now, SoFi is improving profitability, and that's a huge positive. And it still has decent growth, but that growth is starting to slow down. So revenue growth rates for 2023, probably something around a 30% compound annual growth rate. And that is a significant drop when you look back historically. Now, the balance sheet is also stronger. It has about 30% more cash on the books. So we're really at an inflection point here, because here's the problem. A lot of the market, they really want to label this as a bank because it has that bank charter. And for the longest time, it wasn't really labeled as a fintech company. Now, I'll be completely honest with you, real talk. A lot of the pop in SoFi stock, some of it's supported from fundamentals, but a lot of it comes down to momentum. And that's just how the stock market works. When things are running hot, they keep going higher and higher. And then last year in 2022, when people are selling off, things go lower and lower. You want to buy the opportunity when stocks are low and they're beaten down against the grain when no one else wants to touch them. And though I am bullish on this company long term, I own it both in my main portfolio, my $1.5 million taxable brokerage, and the community portfolio. You have to look at valuation in the big picture and try to not just be biased, that you own the stock and you just want it to go to the moon. I get it. I wish I could come on here and just tell you the stock's going to keep going higher and higher and higher, buy. My job here is to be as honest as I can and provide information to help you with your decision. At the end of the day, it's your money, it's your decision. Because that growth is starting to slow down, profitability is a good thing, of course, but more competition is coming into the marketplace as well. So let's look at one positive bull side catalyst, and that's the fact that student loans are going to be back in business. On the flip side of that, you've got more competition, interest rates are higher, so less people are going to probably borrow money at higher rates, and the stock has ripped from its lows, so at some point it's got to cool off. The momentum right now is showing us it wants to go a little bit higher, but if I don't own the stock, my rating on this, is it a buy, a hold, or a sell? It's probably a hold if you own it. If you don't own it, you have to be really careful and understand the risk if you're buying it at these levels. It certainly can go higher, but just be careful loading up the boat, because you saw what happened in 2021. People kept buying stuff and it got higher and higher and higher, and eventually bottom falls out. So a lot of this depends on your goals. Are you trading momentum, or are you a long-term investor? Does it fit into your blueprint? Does it make sense to buy it? And if you do buy it, do you understand the risk, because it could sell off anytime? So short term, I think the stock goes higher. It's a hold. I think the company will continue to do well, but it has gotten ahead of itself a little bit in the valuation, and I think it's going to take some time to really grow into that value. And I would just be really careful buying a ton of shares right now. That's just my opinion. In the end, do what's best with your money. I appreciate your time and attention. If you haven't subscribed, make sure you subscribe. Click that bell for notifications. Drop me a like. Drop me a comment. Have a great rest of your day. Take care.